So this session is going to be a backup class for you. In today's class, we will be discussing the topics that we have already discussed in our classes. So basically, you guys have missed two classes of this chapter. So I'll try to cover the topics that we have already discussed in class, and the obviously the speed will be. I'll try to maintain a higher speed in today's session because we need to cover the topics that we discuss in two lectures. So if you guys have any problem understanding anything during the lecture, just let me know. All right. So starting with the first topic, the chapter that we are discussing, Hiba and Evan, we are discussing the fundamentals of partnership. And until now, in this chapter, we have discussed the meaning of the partnership. And so it's Azan time here, and I'll have to take a break. I'll continue the session after 2 minutes. Is that okay, Hiba and Evan? I'll continue the session after 2 minutes. Abin and Hiba. Yeah. So in the previous two sessions, we have discussed in this chapter the first thing that we discussed in the chapter was meaning of partnership. After that, we have covered features of partnership. Then we talked about the partnership deed, and then the content of the partnership deed. So these topics have been covered in the ongoing class. Other than this, we have covered one more topic, which is called calculation of interest on loan provided by the partner. So first of all, let's cover these topics. But starting with the meaning of partnership, I'm very sure that both of you must be aware what is actually partnership. But still, I'll be explaining you. Partnership has been defined under the Partnership Act 1932. Indian Partnership Act 1932 define the partnership under Section 4. So Section 4 of the Partnership Act 1932 talks about the meaning or the definition of the partnership. So Section 4 define the partnership as the relationship between two or more person. So partnership is nothing but a relationship between two or more person who have agreed to share the profits or losses of the business. So when two or more person agree to work together and agree to share the profits of the business is considered as a partnership. All right, is that clear to both of you? The meaning of partnership is clear to both of you?
Yes.
Yes, sir.
So partnership has been defined under Section 4 of the Partnership Act 1932. It says that partnership is a relationship between two or more persons who are joining together to do a business, and they have agreed to share the profits of that business. Now, there is one important or very interesting point about this definition is that the definition of the partnership as specified as explained under the Act 1932 does not talk about the sharing of the losses. Partnership Act defines the partnership as the relationship of two or more person where those person have agreed to share the profits of the business. That simply means in any kind of partnership, profit sharing is mandatory. It is compulsory as it is prescribed or specified under the Partnership Act 1932. But sharing of losses is not mandatory. That means in a partnership agreement, there can be partners who may share the profits of the business only and deny to share the losses. So if other partner agree that that particular person will only share the profits of the business and he will not be responsible for sharing of the losses, then in such cases also partnership may exist. So the basic requirement of the partnership is that there should be a business and sharing of the profit of that business. All right. Okay. Now, one more interesting thing about the partnership is that the Partnership Act 1932 says that the business for which partners are joining together and then regarding which they are agreeing to work together, that business can be carried on by only one person also. It can also be carried on by all of them collectively, but even if one person agree to operate the entire business on behalf of the others, then also it can be considered as a partnership. So let's suppose there are four partners, and out of four partners, only one partner is managing the entire operations of the business. He is actively contributing to the operations of the business. All the other three partners are not actively participating in the conduct of the business. Then also it will be treated as a partnership. So as per the Partnership Act, business need not to be carried on by all the partners. If business is being carried out by any one partner acting on behalf of the other, then also it will be considered as a partnership. All right, now let's talk about the features of the partnership. So what are the features of the partnership? First thing is that there should be business. There must be some kind of legal business should be there. Business should be there and such business must be legal. If you are joint owner of a particular asset or a property, and being a joint owner or co-owner of that property, you are sharing the revenue from that property, that cannot be treated as a partnership. Let's suppose there is a building and this building is co-owned by two brothers, X and Y. And whatever the revenue generated from this building in the form of rent, this rent is being shared by Mr. X and Mr. Y. Why they are sharing the rent of the building? Because they are co-owner of the building. Let's suppose they have the equal ownership in the building. Let's suppose both have the 50% holding in the building. So that means if the total rental income from that building is 30,000, this rent is being shared by both the brothers. 15,000 each. So sharing of the revenue from a particular source will be considered as the partnership. Answer is no. Sharing of revenue cannot be treated as a partnership agreement unless and until there is a business. If revenue is being generated from some kind of business, and that business should also be legal, then only such revenue, such sharing can be considered as a partnership sharing or partnership agreement. So one of the basic feature of the partnership is that there must be some kind of legal business. All right. Then the next feature of the partnership agreement is that there must be agreement among the partners to run a business. There must be some kind of now the agreement can be oral, it can be in writing as well. Law Partnership Act basically says that there must be an agreement between the partners, but such agreement need not necessarily be in writing only. It can also be in oral. That means if two or more person joining together to make a partnership, so if they may opt to they may opt to enter into the agreement in writing, or they may agree on certain terms and condition orally as well. So there is no restriction regarding the agreement should be in writing or it should be in oral. The law has given complete autonomy to the partners that they can decide whether they want to make a partnership agreement in writing or oral. But law basically says that there should be agreement. Unless and until there is an agreement among the partner, either orally or in writing, there cannot be a partnership. In order to create a partnership, there should be uh, there should be an agreement among the partners. Now, the next feature is that there should be at least 2% to start a partnership, and maximum number of partners in a partnership firm can be up to 50. There is one very interesting thing about this about this feature is that the minimum number of partner in a partnership agreement has been specified under the Partnership Act 1932, but the maximum number of person which can be there in a partnership firm is not specified under the Partnership Act. The maximum number of person, limit of maximum number in a partnership agreement in a partnership firm has been specified under the Companies Act 2013. So Companies Act 2013 says that in a partnership firm there cannot be there must be 50% in a partnership agreement. Any partnership exceeding any part in any firm, if there are more than 50%, it will be treated as illegal association. So a partnership firm has to ensure that the maximum limit of person should not exceed at any point of time. Otherwise, it will be considered as an illegal association. Is that clear to you? Minimum number of person is 2 and maximum can be 50 in a partnership firm. Minimum number has been defined under the Partnership Act, but the maximum limit has been given under Companies Act 2013. Is that clear?
Yes.
Okay. Moving on to the next feature. Business, there should be legal business. We already talked about this. Moving on to the next point. There should be profit motive, or you can say there must be sharing of the profit in the partnership. If two partners are joining together to do business, to do a particular business, and if you want to consider it a partnership agreement, then there should be sharing of the profit as well. Unless and until there is sharing of the profit, it cannot be considered as a partnership agreement or partnership firm. Next character about the partnership is that there is unlimited liability of the partners. Partners are unlimited. Let's suppose, let me give you an example to make it more clear. Liability of the partner is unlimited. That means that liability of the partner is not restricted to the extent of the property that he owns in a particular firm. Let's suppose there are two partners, Mr. X and Mr. Y. Their total holding or ownership in the firm is 5 lakhs, and let's suppose 4 lakhs. All right. Now, liability of the firm, or you can say for the time being, let's say loss of firm is, for example, loss of firm is 9 lakhs. So this loss will be divided among the owners. Where, for example, Mr. X will bear the loss to the extent of his capital, to the extent of his stake in the firm. So that means he will bear the loss up to rupees 5 lakh, and Mr. Y will bear the loss up to rupees 4 lakh, right? But let's suppose there is a different situation. What about if there is a loss of 12 lakhs, right? If the total loss of the firm is 12 lakh, then Mr. X, how much amount will Mr. X will bear and how much will be borne by Mr. Y? So it depends. Let's suppose there is a profit sharing. Both are equal partner in the firm. So this loss is being shared, will be shared between the partner in the equal ratio. That means 6 lakh will be borne by the X and 6 lakh will be borne by Y. So 6 lakh will be borne by Mr. X and 6 lakh will be borne by Y as well. Now the thing is that his total property, his total stake in the firm is only 4 lakh, and his total liability obligation stands at 6 lakh. That means he have to bear total liability in excess of 2 lakh. So in order to bear this loss, he will have to bring the amount from his private property. Is that clear to you? That means if there is a liability exceeding the property of the partners in a firm, then such partner have to cover those obligations or liability from their private property. First, in order to settle the losses, their property in the partnership firm will be adjusted toward their loss, toward the liability of the firm. And if it is still not settled, then the amount will be settled through their private property. So this is why we call the liability of the partners in a partnership firm is unlimited. So this is the prominent feature of the partnership, that liability of each partner is not limited to the amount invested, but as private property is also liable to pay the business obligations. Hiba and Evan, is that clear to both of you?
Sir, can you explain it again?
Yeah, okay. Evan, is that clear to you?
Yes, sir. They have unlimited liability. So it means, so they are even forced to sell their personal assets to
Yeah, correct.
um, personal assets to that. What you can say, to pay
Yeah.
off the
So
debts.
in order to settle their obligation, they have to sell their
Sell their
private
personal
property as
assets.
well.
Yeah.
Okay, Heba, I'm explaining it again for you. Just let's suppose property in the firm. Mr. X owns total property of 2 lakhs in the firm, and Mr. Y owns total property of 3 lakh in the firm. And let's suppose both are partners sharing profit and profit and losses. Their profit sharing ratio is equal. Let's suppose 1:1 is their profit sharing ratio. They will be sharing profit or losses equally. Now, if there is a obligation towards the firm, let's suppose there is a loss incurred by firm. The value of the loss is let's suppose 1 lakh. Okay. Now this loss is to be divided among the partners in the equal ratio. So out of 1 lakh, 50,000 will be borne by Mr. X and 50,000 has to be bear by Mr. Y will be bearing the remaining 50,000 loss. All right. Now you can see the property, their ownership in the firm is 2 lakh. They have sufficient capital in the firm, right? So this loss can be adjusted from their from their shareholding in the firm. Similarly, Mr. Y owns property of 3 lakh in the firm. So this loss can be adjusted from his property in the firm. So they have sufficient capital in the firm to settle these losses. But let's suppose the loss of the business is 8 lakhs. Loss of the business is 8 lakhs. Now this loss is again, it will be settled in the equal ratio between it will be divided up between the partner in the equal ratio, right? So out of 8 lakhs, 4 lakh will be borne by Mr. X and 4 lakh will be borne by Mr. Y. Now you can notice the total property that Mr. X owns in the firm is only 2 lakh and Mr. Y owns the total asset of 3 lakh. So out of the loss of 4 lakh, 2 lakh can be adjusted from the capital of Mr. X in the firm. Similarly, out of 4 lakh, 3 lakh can be adjusted from the capital of Mr. Y. But remaining liability, for remaining liability, what is the remaining liability of X? It will be 2 lakh. And remaining liability of Y will be 1 lakh. So for the remaining liability, they will have to contribute it to their private property. They will have to bring sufficient amount of cash from their personal belongings. Is that clear to you? This is why we call the liability of the partners are unlimited. If losses can be adjusted from their capital, it will be adjusted from their capital. But if losses exceed their capital contribution or their property in the firm, then the remaining losses has to be adjusted to their private properties.
So they
Is
have
that clear?
to sell their properties in order to pay off
In
that
order
debt.
to pay off, correct. In order to pay off the liabilities of the firm. That is why we call it unlimited liability. Now it is clear, Heba?
Yes, thank you.
Okay.
Yes, sir, it's clear.
Now, next point is, next thing is, so what about registration? Is it mandatory to register a firm in order to run a partnership business? Whether the partners are required to register their partnership firm? So the answer is very simple. Again, the Partnership Act gives the autonomy to the partners whether they want to register their partnership firm or not. That means registration is not mandatory as per the Partnership Act. Partners can agree to run a partnership business without being registered also. But obviously there are certain limitation of the unregistered firm. If you do not register, if you do not want to register a firm, it is up to you. If you do not want to register a firm, Partnership Act gives complete authority, complete liberty or autonomy to the partners that they can continue the operations of the business without getting registered. But obviously, if you do not register your firm, then there will be certain limitation that get attracted towards the firm. Like for example, if you have some kind of dispute with third party, if you want to take legal action against let's suppose against your partners, then in such a situation you won't be able to take the legal action. So therefore registration is always registration is advisable. Like you should get your firm registered, but if you do not want to get your firm registered, you can still continue the operations of the business without being registered. But obviously there will be certain limitation, certain drawbacks of that. Now the last, I guess the second last point is mutual agency. Under mutual agency feature, it is written that partners in a partnership firm is considered as both agent and principal for each other. That means act performed by one partner can affect the other partners. That means act performed by other partners, the other partners will automatically become liable for the act performed by one person. Let me explain this through one small example. Let's suppose there are three partners X, Y, and Z. They both are all three are partners. Let's suppose Z have Z and Z entered into an agreement with a supplier to supply goods valuing rupees 50,000. All right. So that means Mr. Z is buying goods of rupees 50,000 from supplier on credit, right? So liability to pay this debt will also fall onto Mr. X and Mr. Y. Even if this entire agreement has been executed between Z and supplier, but the impact of it will also fall on Mr. X and Mr. Y. That means Mr. X and Mr. Y will also be liable for this particular liability. In this case, act performed by this person is applicable to these partners as well. Liability incurred by one person, one partner is applicable to the other partner as well. This is called mutual agency. Mutual agency simply means act performed by one person will be applicable to the others as well. And let's suppose Mr. X execute any kind of agreement or enters into any kind of activity, then the impact of that activity will affect Mr. Y and Z as well. So this is known as mutual agency. There must be mutual agency among the partners in such a way that any act performed by one partner can affect the other partners in the form. Right, Hiba and Evan? Is that clear to you?
Yes, sir.
Yes, sir.
And the last one is that transferability of share. Now, see, if you ever, if you have heard about companies, features of companies, one of the features of the company is that if you become the investor in a company by purchasing a share, let's suppose, let me give you an example about an Indian company. Let's suppose there is a company called Wipro. All right, Wipro, which deals in the IT sector, right? If I have bought a share of a Wipro company and I want to sell the shares of the Wipro company to some other person, right? So I can sell those shares. There will be no intervention by the company. There will be no intervention by anyone. I have the complete authority to sell the share, to transfer the share. I can make some other person shareholder of that company, but simply transferring the shares of the company. But in case of partnership form, this cannot be done. Partnership Act 1932 says that partners, if one person is willing, if one of the partner in the business willing to transfer his share to some other partner, to some other person, he can only do that if the other person, other partners in the business gives 100% consent regarding that. Let's suppose let's suppose there are three partners, Evan, Heba, and Imran. If one of us want to transfer the share, let's suppose all of us are equal partner in the business. Now I want to transfer my ownership. I want to transfer my part of share to some other person, to Mr. X. Unless and until both of you agrees on this, I cannot transfer my share. There is a restriction on transfer of share. In order to transfer the share, I need to take the consent of all the partners. If there are three partners, I need to have the consent of all the remaining two partners. Is that clear? Unless and until other partners give me the consent to transfer the shares, I cannot transfer my part of share to some other person. That means without the consent of the remaining partner, I cannot introduce a new person into the business. This is called transferability of share in the partnership agreement in the partnership form is restricted. It can only be done with the consent of all the partners. Tell me, Hiba and Evan, is that clear to both of you?
Yes.
Yes, sir.
Yes, sir.
Okay. So these are the various features of partnership. So until now, we discussed the meaning of the partnership. Hope it is clear to you that partnership has been defined in the section 4. And it says that partnership is simply a relationship between two or more persons who have agreed to share the profits of the business, and that business can be carried on by one person, and it can also be carried on by all the partners collectively. Then we discuss few features like there must be legal business, there should be mutual agency,
There should be
transferability of
profit
shares is
motive.
not allowed, registration is not compulsory, there must be unlimited liability, and profit must be shared among the partners. All right. Now, moving on to the next topic, which is called partnership deed. Now, see, partnership deed is nothing, but it is a formal agreement between the partners. Let's suppose if there are three partners, so they must be agreeing to work with each other on certain terms and conditions, right? So partnership deed is nothing but a written format of all the terms and condition agreed among the partners. So partnership deed is simply an agreement among the partners. It contains the terms and condition upon which persons or partners are joining together to work together in a form. All right. So partnership deed is a partnership agreement between the partners of the firm which outline the terms and condition of the partnership. So why do we make partnership deed? Why there is a need to prepare a partnership deed? Achha, one more thing is that partnership deed, you will find a partnership deed only in such kind of firm where the agreement among the partners has been in in the written form. If partnership agreement has been done orally, then there will be no partnership deed. All right, partnership deed is a written agreement among the partners that contains the terms and condition of the partnership. Why do we make the partnership deed? So that it gives the clear understanding of the rules of each partner involving in the business, so that we can run the operations of the business smoothly. This is why we make the partnership. Following are also importance of the partnership. Like when you prepare a partnership deed, it will help you in settling any kind of dispute that may arise in future among the partners. It will also act as a evidence in the court of law. Like there may be a situation that there is a dispute among the partners. So in order to settle the dispute, court may use this partnership deed as a document of evidence, and it also helps in regulating the duties and powers of the partners. So these are various advantages, or you can say the importance of making the partnership. It helps in settling the dispute. It serves as an evidence in the eyes of law, and it regulates the duties and the powers of the partners. All right. Now, now the next question is, sir, what are the content of the partnership? What do we write in the partnership deed? So these could be the various content in the partnership deed. Like it may contains the name and address of the partners, name and address of the firm, what is the principal place of business, what kind of business that firm will be doing, date on which partnership is being entered among the partners, then what is the amount of capital contributed by each partners, what will be the amount of interest that will be paid on their capital contribution, whether or not we will be paying salary or commission to any partner, and what will be the profit sharing uh, ratio among the partners. So these are the various content of a partnership. Name and address of the partner, name address of the firm, place of business, nature of business, date of partnership, rules regarding operation of bank account, capital contributed, what will be the interest that we will be paying on interest or on the capital contribution, then salary, commission, whether to be paid to the partner or not, profit and losses, what will be the ratio of sharing of profit and losses among the partners. So these are the various content of the partnership. All right. So just keep this in mind that every whether interest will be paid, salary will be paid, commission or profit, in what ratio profit will be shared, everything is specified under the partnership deed. All right, everything is specified under the partnership deed. But if certain thing is not mentioned in the partnership deed, like for example, if two or more person are entering into a partnership agreement, but they forgot to decide the ratio in which they will be sharing the profit or the losses of the business. Similarly, if they forgot to mention the interest on capital, the rate of interest that partner will be getting on their capital contribution, or they haven't discussed about the salary or commission to be paid to the partner, or they didn't write anything about the interest or loan, whether it will be paid to the partner or not on their advances given to the firm. And similarly, what will be the rate of interest if us or if a particular person withdraws certain amount from the business. Then in such a situation, partnership, the provision of the partnership will be applied. But before telling you the provisions of the partnership, I just wanted to know whether everything is clear till this point. Partnership deed is clear to you. Content of the partnership deed is clear to you.
Yes, sir.
Evan, is that clear to you?
Yes, sir. It's the agreement between the partners of the firm.
All right. Okay. And what is the importance of partnership deed? It is important because it helps in settling the dispute. It can act as an evidence in the eyes of law, and it also regulates the duties and powers of the partners. And these are the various content of the partnership. Now, as I told you, most of the things are already discussed among the partner at the time of entering into agreement, at the time of starting of a partnership business. But if partnership deed is silent regarding something, like if for example let's talk about sharing of profit. Sharing of profit, it should be discussed among the partners that in which ratio they will be sharing the profit of the business. But if by chance there is no discussion about the sharing of profit, or you can say the partnership deed is silent, partnership deed is silent, then in such a situation, provisions of the Partnership Act will be applied. Partnership Act 1932 will be applied. So if how profit will be shared among the partners is not discussed, then in such a situation, Partnership Act 1932 says that it should be divided among the partners in the equal ratio. All right. If sharing of profit is not mentioned in the partnership deed is silent about sharing of profit, then in such a situation, it will be shared equally, and it is given under the Partnership Act 1932. Similarly, if partnership deed is also silent about interest on capital, interest on capital contributed by partner. Let's suppose there are three partners, all the partners are contributing 1 lakh each in the form of capital, in the form of their capital contribution. And partnership deed does not tells you about the rate of interest that will be paid on their capital contribution. So if there is no agreement among the partner, then Partnership Act 1932 says that it should not be paid to the partner. It will not be paid to the partner. Interest on capital is not allowed to the partner unless and until specifically agreed among the partner. If partners are specifically agreeing regarding payment of interest on capital, only then a particular person, a particular partner can claim interest on their capital contribution. If partnership deed is silent about interest on capital, then Partnership Act 1932 says that partner cannot claim interest on their capital contribution. Similarly, so what about salary or any kind of commission? Is partner entitled to claim salary in the partnership? Let's suppose there are two partners, and one of which is actively contributing to the operations of the business, and the other one is not. You can say other one is the sleeping partner or the silent partner. Only one person is executing every kind of activity. then for doing all the operation, whether such partner can claim salary or any kind of commission, answer is no. If partnership deed is silent, then he cannot claim salary or commission. Partnership Act 1932 also says that if salary is not already agreed among the partner, then partner cannot ask for salary or commission or any kind of remuneration for taking part in the business. Salary or commission is not be provided to the partner for simply contributing in the conduct of the business. Next. So what about interest on loan? Partner are providing advances or interest, advances or loan to the business. So any partner who is providing loan or advance to the firm shall be provided with the interest. If it is already agreed, if let's suppose partners have agreed to pay the interest at the rate 10%, then such partner will be paid interest at the rate 10%. But if there is no agreement, if partnership deed is silent about the payment of interest on loan, then Partnership Act 1932 says that in this situation also, partner who is providing loan and advances to the firm can claim interest at the rate 6% per annum. Is that clear to you? See,
Yes.
when we talk about sharing of profit, if profit sharing is not mentioned in the partnership deed, Partnership Act says that it should be shared equal. If partnership deed is silent about interest on capital, then partner cannot claim interest on capital. If partnership deed is silent about salary and commission, then partner cannot claim salary or commission. But if partnership deed is silent about interest on loan, then also partner who is giving loan or advances to the business can claim interest at the rate 6% per annum. Or otherwise, if there is already agreement regarding payment of interest, then interest will be paid as per the agreement. Let's suppose there is an agreement among the partner that they will be paying interest at 8% to the partner who have given a loan to the firm. Then interest of 8% need to be paid to such person who is giving loan to the business. But if there is no agreement, then in such a case also payment of interest will be 6% per annum. All right. Next point is okay. Next thing is interest on drawing. Interest on drawing. If partner are withdrawing certain amount from the business, whether such partner will be charged interest on their drawing or not. So the answer is, if partnership deed mention the rate of interest on drawing, then such rate of interest will be applied to person who is withdrawing the fund from the business. But if partnership deed is silent, then partnership firm cannot just yeah. If partnership deed is silent about interest on drawing, then such partner cannot be asked to pay the interest on his drawings. Is that clear? So these are 5 very important points that need to be kept in mind, that if profit sharing is not discussed in the partnership deed, it will be shared equally. Interest on capital, unless and until already agreed among the partner, it cannot be claimed by the partner. Salary and commission, unless and until there is any agreement, it cannot be claimed by partners. Interest on drawing, irrespective of whether agreed or not, as per Partnership Act 1932, partner will be entitled to claim 6% per annum or as per the agreement. Or if there is drawing made by the partner, on such drawing, interest cannot be imposed, cannot be applied. So these are the 5 very important provisions as per the Partnership Act. Tell me, Hiba and Abel, all these points are clear to both of you?
Yes, sir.
Yes, sir.
All right. So there are few questions that I need to discuss with you. The first question is, in the absence of partnership deed, what are the rules relation to the following? The first thing is salaries of partner. Tell me how salaries will be dealt with if there is no agreement, whether partner will be entitled to claim the salary or not, whether the salary will be paid to the partner, yes or
No.
no.
No,
Correct,
sir.
Abel? Yeah.
Yes, sir.
Then
No, sir.
what
They're not
about
allowed.
interest on partners or partners capital? If there is no partnership deed, partners can claim the interest on their capital contributions.
Yes, sir.
They can claim
No.
interest on
No.
capital contribution.
No.
No, they cannot claim interest on their capital contribution unless and until partnership deed talks about it.
Yes.
Next point is interest on loan by partner. When loan is provided by the partner, then in such a situation, partner is entitled to claim the interest on such loan. If the partnership deed is silent, yes or no?
Yes.
Yes. At what rate?
6%.
6% per annum.
Sir, in the presence of partnership, it's not possible.
Sorry, in case of?
In case of if the partnership is present, now it's absent rate.
No, in case of if there is a partnership deed, if there is a partnership, you can say, if there is any terms and condition in the partnership deed regarding the payment of interest on loan, then interest will be paid according to the terms and condition agreed in the partnership deed. But if there is no partnership deed, if there is no partnership agreement, if there is no agreement regarding the payment of interest on loan, then in such situation also, Partnership Act 1932 says that partner is entitled to claim interest at the rate 6% per annum. So in case of option C, question C, interest on loan can be claimed by the partner at 6% per annum.
So that's
Is that clear, Arvind?
okay.
Okay. Now, division of profit. Partnership deed is silent, then how can we divide the profit? In what ratio we will be dividing the profits of the business? Tell me. If partnership deed is silent, then how do we decide? How do we divide the profit?
Equally,
Equally, correct. We will be dividing the profits of the business
equally
in the
only we will
equal,
share the profits.
in the equal ratio. Correct.
Equal ratio.
Okay. Then the E point is interest on partners drawing. If partnership deed is silent, then partners cannot be asked to pay the interest on their drawings. You can only ask partners to pay for the interest on their drawing if there is already agreement between the partner regarding the interest on drawing. And last one is interest on loan to partners. Interest on loan to partner. Tell me, if firm is giving loan to the partner, let's suppose all three of us are partners in a business, and firm is providing loan of rupees 5 lakh to Evan. So if there is no partnership deed regarding the interest that will be charged from Evan against the loan of 5 lakh, tell me whether firm will be entitled to claim the interest or not. Interest on loan to partners. Whether firm will be entitled to charge the interest on such kind of loan or not.
No.
No, sir.
No.
Without the
Unless and until there is a specific agreement regarding the interest on loan to partner, firm cannot ask partner to pay the interest. I hope all these points are clear to you. These are the explanation of all the points. So since everything is clear, I'm moving to the next question. Just a minute. Okay. Moving on to second question. Mahesh, Ramesh, and Suresh are partners in a firm. They do not have a partnership deed. At the end of the first year of the commencement of the firm, they have faced the following situations, following problems. So there are three partners. they do not have a partnership deed, obviously, and they are facing these situations, these problems. All right, so we need to settle the dispute that is arising between the partners. All right, the question A, the point A, the problem A is Mahesh wants that interest on capital should be allowed to the partner, but Ramesh and Suresh do not agree. Tell me whether Mahesh contention is correct or incorrect, whether Mahesh is right or wrong regarding interest on capital that he's asking, whether he is entitled to claim the interest on capital or not. Mahesh is entitled to claim the interest on capital or not.
No.
No, sir,
Okay.
because he need the
Because
consent.
Yes.
no, because we need to have the partnership deed regarding interest on capital.
Ah,
Since
yes.
there is no agreement regarding payment of interest
Yeah,
on
in
capital
agreement, it's not
contribution.
given.
Yeah. Since there is no agreement, he cannot claim the interest on his
Interest on
capital
share.
contribution. Next point. B. Ramesh wants that partners should be allowed to draw salary, but Mahesh and Suresh are not agreeing. Tell me, Ramesh wants that the partner should be allowed to draw salary. Basically, Ramesh wants to draw salary. So whether Ramesh will be entitled to claim the salary or not?
No.
No,
No.
sir, it's not given in
Same.
part.
The answer is same because there is no partnership deed regarding the withdrawal of the salary. Okay. If partnership deed talks about the payment of salary to Ramesh for his active participation in the business, then only Ramesh will be eligible to ask for the salary. Next point. C. Suresh wants that the loan given by him, that means Suresh is giving the loan given by him to the firm should bear interest at the rate 10% per annum. But Mahesh and Ramesh are not agreeing upon this. Tell me whether Suresh will be entitled to claim 10% interest on his loan to the firm, whether he
No.
will be entitled to claim 10% or not. Keeping in mind that there is no agreement regarding payment of interest. After providing loan to the business, now at the end of, let's suppose at the end of the year, Suresh is asking the business, Suresh is asking the other partner to pay him interest on his loan at the rate 10% per annum. So whether Suresh will succeed in doing so or not, whether Suresh can claim 10% interest on his loan contribution or not. Tell me, Evan, will he be able to claim 10% interest on his loan? Tell me, Evan.
Yes, sir.
He will be able to claim 10% interest. Are you there?
He won. Yes.
You guys are confused about this? Okay, give me a moment. Let me explain this.
A bit confusion.
No problem. See, thing is that who is giving loan? Suresh. Okay, Suresh have given a loan. Suresh have given a loan to firm, right? So loan given by partner. This is the case of loan given by partner. At the time of giving of loan, there was no agreement. No agreement has been entered, right? There was no agreement between the partner regarding payment of interest. At what rate interest will be paid, it is not agreed among the partners. Now, after certain time, after a certain period of time, Suresh is asking to pay interest for his loan at the rate 10% per annum. Now, answer is very simple. Partnership Act 1932 simply says that if there is no agreement between the partners regarding payment of interest, regarding the rate at which interest will be paid, then in such situation, only 6% per annum Suresh is only entitled to claim interest at 6%. He is not eligible to ask interest at 10% per annum. Undoubtedly, Suresh is eligible to ask for the interest on his loan, right? And he can claim interest, but not at the rate 10%. Why he cannot claim at interest at the rate 10%? Because there was no agreement regarding payment of interest at the time of giving of the loan. Since after providing the loan, he's asking the firm to pay the interest at 10%. So Partnership Act 1932 basically says that he can only claim interest at 6%. He won't be able to claim 10%. Tell me, Abin and Hiba, is that clear to you now?
Yes, sir.
Okay, there is a specific rate given by the agreement.
Yeah. So
Only
see,
6% he can
only
charge.
6% he can claim because there was no agreement regarding payment of interest. Why he is able to claim 6%? Because Partnership Act 1932 is allowing him to do so.
This is legally allowed.
Partnership Act 1932 is helping him to claim interest at 6%.
6%.
He cannot claim 10% or 20% or at any other percentage.
Okay, he cannot claim more than 6%.
More than 6% unless it is agreed among the partners. Let's
Oh.
suppose at the time of providing of the loan, Suresh specifically agreed with the other partner that he will be charging interest at the rate 15%. Whatever the loan he is providing to the firm, he will be charging 15% interest on that loan. Then he can obviously ask interest at 15% per annum. So law is very clear about the interest on loan. Law basically says that if there is agreement, then interest will be paid as per the agreement. If there is agreement, then interest will be paid as per the agreement. But if there is no agreement regarding payment of interest, then in that situation, only 6% can be claimed by the partners. Is that clear?
Yes,
Yes,
sir.
sir. Yeah.
So this was the case.
If there is an agreement, can be claimed.
Yeah, if there is an agreement, then it can be claimed as per the agreement. Whatever
Okay. If
rates
there
have
is
been
no
agreed among
agreement,
the partners.
it cannot be claimed.
It cannot be, it can still be claimed, but only up to 6%.
Okay, up to 6%.
So basically, in both the situation can be claimed. If there is agreement, then as per the agreement. But if there is no agreement, it can only up to 6%. All
Okay.
right. Now the last one is Mahesh and Ramesh have contributed larger amount of capital. Okay, so there are three partners, no? Mahesh, Ramesh, and Suresh. Since Mahesh and Ramesh have contributed larger amount of capital, they desire that profit should be divided in the ratio of their capital contribution. But Suresh does not agree. All right. So clearly, at the time of entering into partnership, partners did not basically did not talk about the sharing of the profit and losses, in which ratio they will be sharing the profits and losses of the business. After entering into the business, Mahesh and Ramesh are saying that since they have contributed larger capital, so profit shall be divided in the capital contribution ratio. So whoever have contributed larger part of the capital should take the larger proportion of the profit as well. So whether contention of the Mahesh and Ramesh is correct? Tell me. Mahesh and Ramesh are claiming that profit should be divided in the capital contribution. Tell me, Mahesh, contention of the Ramesh and Mahesh is correct or incorrect?
And
Will they be able to claim the?
Sir, there must be an agreement.
No partnership deed.
Obviously, they correct. If there is, since there is nothing mentioned in the partnership deed regarding the sharing of the profit of the business, so in the absence of partnership deed, profit should be shared equally.
Equally.
So in this case, Mahesh and contention of the Mahesh and Ramesh is incorrect. Profit will be shared equally.
Equally.
Okay.
Okay, sir.
So this is it, guys. Abin and Heba. We will continue with the remaining part of everything that is left to be covered in the next session. So from now we will be continuing with our regular session. Okay. So since other students have already joined in, so we will continue with a new topic that we were discussing in the last class. Okay, guys, welcome all of you. Good evening. So in the last session, we were discussing about the treatment of interest on loan. We have done few questions based on this. Today we will be starting a new topic, but let's first of all revise everything. Then we will continue with the other topics. So in this particular topic, we discussed that in the partnership business, interest on loan, treatment of interest on loan depends upon whether there is agreement among the partner or there is no agreement among the partner. If there is agreement among the partner regarding payment of interest, then treatment of the interest on loan will be dealt according to the agreement among the partner. But if there is no agreement, then in such a situation, provision of the Partnership Act get attracted and the interest will be paid as per the Partnership Act 1932, which says that in the absence of partnership deed, partner is entitled to claim interest at the rate 6% per annum. All right. Then we have done. I've also we also talked about the general entry for the interest on loan. So there are two general entries. One is when the interest is due, and one is when interest get transferred to the profit and loss account. So when interest get due, the general entry for this will be interest on loan account debit to partner's loan account. And similarly, when it get transferred to the profit and loss account, the general entry will be profit and loss account debit to interest on loan. We already did question number 6 and question 7, and in the previous session we were discussing the question number 8, and I think we completed this question as well. Then we talked about the format of the profit and loss account. We have discussed this part. After that, I think we have also discussed the question number 9. That was about the bat and ball. Yeah. So bat and ball are partners sharing the profit. We have already discussed this question. Huh? We already discussed
Yes,
this
sir.
question. Yeah, bat and ball. I think I have given you 1 or 2 questions for homework as well. So is this the question I gave you for homework? Akhil and Bimal are partners sharing profits. Is this the same question I gave you for homework?
Yes, sir. I think so.
So all of you have completed this one? Anybody having any doubt or any kind of question they want to ask?
Sir, yesterday's regular class we live in between.
Sorry?
Sir, yesterday we joined only your class and you said to
Yeah,
leave
okay.
the class.
So
Yeah.
this is Evan, right? So Evan, the homework was not for you.
Okay, okay. Sir.
I'm talking about the other student, whether they have done it or not. All of you have completed this one. Let me know so that we can proceed to the next question. Otherwise, I'll be solving this for all of you.
Yes,
Everyone
sir.
have
Sir, done.
completed. All right. So next is question number 11. So Nirmal and Pawan are partners sharing profit in the ratio of 3:2. The firm had given a loan to Pawan of rupees 5 lakh on 1st April 2020. Interest on loan was to be charged at 10% per annum. The firm took a loan of rupees 2 lakh from Nirmal on the loss of 10,000 for the year ended March 2021. Determine the amount to be transferred to profit and loss appropriation account. So, have we completed this question in the previous class? Yes.
No, sir.
So we will be starting our session with question number 11. After this, we need to discuss few new topics, like we will be talking about the treatment of interest on drawing. How do we treat interest on drawing? So, but before moving to the next topic, let's solve this one. Question number 11. I want all of you to take the screenshot of this question, please. Then we will continue with the solution.
Done, sir.
Okay. So the question mentions that there are two partners, Nirmal and Pawan. Both are partners in the profit sharing ratio 3:2. Firm had given a loan to Pawan for rupees 5 lakh. Okay, firm is providing loan to Pawan on 1st of April, and interest rate will be charged from Pawan is 10%. Firm took a loan of rupees 2 lakh from Nirmal as well. Okay. So first of all, let's start with the calculation of interest. Calculation of interest on loan. Calculation of interest on loan. Partners. Okay. Partners. So who have given loan to the business, to the firm? The firm took a loan of rupees 2 lakh from Nirmal. In the fourth line, you can read that the firm took a loan of rupees 2 lakh from Nirmal. Okay. So Nirmal have provided a loan of 2 lakh. Correct. And since there's nothing written in the question that at what rate Nirmal will be paid interest upon his loan, then in such a situation, the rate of interest will be 6%. Since there was no agreement regarding payment of interest, then in such a situation, rate of interest will be 6% per annum. And obviously the loan has been provided in the on October 1st, right? So from October till 31st March 2021, interest will be paid. So interest will be paid for 6-month period, 6 by 12. All right. Calculate interest on 2 lakh. We will be calculating interest at 6%. So it will be 12,000, and 12,000 divided by 12 into 6. So it will be 6,000. So the interest on loan, Nirmal's loan will be 6,000. Is that clear, all of you? Interest on Nirmal's loan will be 6,000. Is that clear, all of you?
Yes, sir.
Okay. Now, calculation of interest on loan given to partner. Given to partner. So Pawan have borrowed 5 lakh from the business, right? So Pawan need to pay interest at the rate 10% per annum. It is already agreed between the firm and Pawan that Pawan need to pay 10% interest. So on 5 lakh, interest rate will be 10% per annum. And since the loan has been taken by the Pawan on 1st of April, so this means that he will have to pay interest for the entire year, right? For the period of 12 months. So 12 by 12 for the period of 12 months. So the interest that Pawan will be paying, it will be 50,000 for 1 year. Tell me, is this clear to all of you? Calculation of interest that will be provided to the partner, Nirmal, and that will be claimed from Pawan. From Nirmal, to Nirmal we will be giving 6,000. From Pawan, we will be claiming 50,000. So this will be the inflow in the firm, and this will be the outflow for the firm. Tell me, guys, is this clear to all of you?
Clear, sir.
Yes, sir.
Okay. Now, in the sixth line, it is written that before giving effect to the above, the firm incurred a loss of rupees 10,000. So firm is already in loss, all right, and determine the amount to be transferred to the profit and loss appropriation account. Okay, so now we need to calculate the amount that will be transferred to the profit and loss account, or you can say profit and loss appropriation account. So amount to be,
Sir, should we write this?
yeah, please write it down. Amount to be transferred to profit and loss appropriation account. Profit and loss appropriation. So first of all, there is already a loss before payment of interest, or loss before interest. Loss before interest is 10,000, right? That means it is already in negative. This is in negative. Minus 10,000 is the profit of the business. That is, loss is 10,000. Now we need to pay Nirmal 6,000 on his loan that he have given to the firm, right? So if we will pay 6,000 of interest to Nirmal, it will further exceed the loss of the firm, right? Less interest paid to Nirmal. We will be paying interest of 6,000 to Nirmal. So the overall loss will extend to 16,000 now. Earlier it was 10,000. We have to pay further interest of 6,000. So the overall loss will be 6,000. Now, since we have given a loan of 5 lakh to Pawan, and we are entitled to claim an interest of 50,000, that means that is going to increase the overall revenue of the business. So we will be add interest paid by partner, interest received from Pawan. Interest received from Pawan is how much? It is 50,000. So we will be adding 50,000. So finally, the profit that should be transferred to profit and loss account, profit transferred to profit and loss appropriation account will be, tell me, minus 10,000 minus 6,000 plus 50,000. It will be 34,000. So this will be transferred to the profit and loss appropriation. Tell me everyone, is this clear to all of you or not?
Clear, sir.
Clear. Abin, Hiba, Mohammed, Saif, Mariam, everyone?
Yes, sir.
Okay.
Yes.
Okay, let me explain it once more. First of all, since it is mentioned in the question that Nirmal is giving a loan of 2 lakh to the business, to the firm. So on this amount, we will be paying Nirmal interest at 6%. So why 6%? Because there was no agreement between the partners that at what rate we will be paying interest on his loan. So since there was no agreement, therefore we are paying interest at 6%. And this loan has been provided in the month of October, so interest will be charged for the 6-month period only. Then we have given a loan to one of our partner, Pawan, value 5 lakh, and we there is an agreement between partner Pawan and Nirmal that Pawan need to pay 10% interest. So accordingly, we will be charging 10% on his loan, and this 10% will be charged for the complete year. So therefore 12 by 12. So the total interest that will be charged from Pawan will be 50,000. So obviously this is income of the business. This is expense of the business. Okay, now we need to decide how much amount will be transferred to the profit and loss appropriation account. So for that purpose, we did this calculation with this, we prepared this statement. Loss before interest was 10,000. Loss further extended by 6,000 due to the payment of interest to Nirmal. And finally, we received 50,000 from Pawan against loan. So the total, finally, the total amount of profit will be 34,000. This will be positive. It will be transferred to the profit and loss appropriation. Okay, so I hope everything is clear till this point. Now we will move to the next topic.
Excuse me, sir.
Yes, please.
So can you show the solution of the 11, number 11?
Solution to question 11.
Yeah, the answer is this one.
Sir,
Yeah.
isn't there a distribution of profits?
See, question does not require us to distribute the profit. See, in the question, it is simply written in the last point, it is written that determine the amount to be transferred to the profit and loss appropriation account. Question is not asking you to show the distribution of profit among the partners.
Okay. Okay, sir.
Therefore, we are not distributing between the partners.
Okay, thank you.
Okay, can we move to the next question, please?
Yes.
Wait.
Wait.
So just a minute.
Tell me when you are done.
Okay. Sir.
All right, everyone. So these questions were based on the based on the calculation of interest on loan. So we discussed, I guess, 8-9 questions specifically based on the calculation of interest on loan. Now we will start with a new topic, which is treatment of interest on loan. Sorry, interest on drawings. How we will be, how interest on drawing will be dealt with. So see, I'm sure that all of you already knows the meaning of drawings, right? Like in the class 11 in accounts, that you must have understood the meaning of drawing. Drawing is nothing but the withdrawal of amount from the business for the personal use or the private use. If any partner is withdrawing certain amount of fund or any kind of asset from the business for his private or personal use, that will be considered as the drawings, right? Drawing is the withdrawal of amount or any kind of asset by the partner for his personal or private use. Okay, now drawing, there are two perspectives of drawings. See, whenever drawing is being done, interest will be imposed on such drawings if partners have agreed upon the payment of interest on drawings. Let me explain this concept on the paper. Just a minute. Let's suppose there are two partners, partner X plus partner Y. They have entered into an agreement and they already agree that whenever any of them withdrew funds, makes any make drawings from the business, any of them makes withdrawal from the business, such drawings will be subject to interest. Any person making withdrawal from the business, such drawings will be subject to interest at the rate, let's suppose they have agreed at 5% per annum. Okay, so whenever drawings will be made, such drawing will be subject to interest of 5%. But unless or until there is agreement regarding payment of interest, interest cannot be claimed. That means interest can be claimed by the firm only when there is agreement among the parties. If there is no agreement, then interest on drawing cannot be claimed. All right. Now, as far as the interest is concerned, see, interest is from the firm point of view, from the partnership firm's point of view, interest is always considered as income, right? Let's suppose there is a business, there's a partnership agreement between the partners. They are so there is a firm X and Y. There is a firm X and Y firm, and let's suppose Mr. X have made certain withdrawal of certain amount. Then Mr. X will have to pay the interest, right? For example, Mr. X will be paying interest at the rate 5%. All right. So interest being paid by the partner will be considered as the income for the firm's point of view, from the firm point of view, right? Income paid by partner to the firm is considered as, sorry, interest paid by partner to the firm will be considered as the income for the firm. But from partner's point of view, the person who is making such interest, who is paying such interest, from partner's point of view, will always be considered as the expense. Is that clear? So interest on drawing have two perspectives. From the firm's point of view, it will be considered as the income. From the partner's point of view, it will be treated as the expense. Is that clear? From firm's
Yes.
point of view, it is considered as income. That means it will increase overall revenue of the business of the firm. But because it is expense from partner's point of view, so it will reduce the capital of the partner in the business. From partner's point of view, interest on drawing is an expense, so it will reduce the capital of the partner in the business. From firm's point of view, it is income, so it will increase overall revenue of the business. Got it? Is that clear to all of you?
Yes, sir.
So the treatment of interest on drawing have two phases, two pictures. From the point of view of firm, it is considered as the earning for firm. From partner's point of view, it is considered as the expense. Okay. Now moving on, we will talk from the perspective of partner only. We won't be discussing about the firm for the time being. We will only consider the perspective of the partner. Okay. So journal entry for interest on loan. Whenever interest is due, let me explain this separately. We need to pass the journal entry for interest on drawing. So there will be two journal entries. First will be when interest on drawing is due. Okay. First journal entry will be done on the date on which the interest on drawing is due. And second journal entry will be done when interest is transferred to profit and loss account or profit and loss appropriation account. Profit and loss appropriation. So there will be two journal entries for interest on drawing. First will be when it get due, and second will be when it get transferred to the profit and loss appropriation account. So sorry. So when interest is due, the journal entry for this will be partner's capital account partner's capital account debit to interest on drawings account. This is the general entry when interest on drawing is due. And similarly, when interest on drawing is being transferred to the profit and loss appropriation account, in such a situation, general entry will be interest on drawing account debit, interest on drawings account debit to profit and loss appropriation account. Profit and loss appropriation account. So these are the two general entries that need to be done whenever there is interest on drawing. So I want all of you to write it down. General entry for interest on loan. There will be two general entries when interest actually get due and when it is transferred to the profit and loss appropriation. So when it get due, the general entry will be partner's capital account to interest on. Why partner's capital account is being debited? Because it is a loss, or it can be treated as an expense for the partner. Therefore, we are reducing the capital of the partner. Therefore, we are debiting the partner's capital account. So partner's capital account is debited to interest on drawing. And finally, this interest is being transferred to the profit and loss appropriation account. So interest on drawing account debit to profit and loss appropriation account. Done, everyone? Done, all of you? Abin, Heba, Saif, Mariam.
Yes, sir.
Wait,
What about it? Alexander?
Oh, wait, sir. 1 minute.
Sir, done.
So now let's talk about how do we calculate interest on drawing. How do we actually calculate interest on drawing? So see, there are actually two methods to calculate interest on drawing. As per our syllabus, there are two methods of calculating interest on drawing. Whenever drawings are made by a partner, we need to charge interest, and that interest, the calculation of interest, have two methods. One is called the average period method. Average period method. And the other is called product method. Product method. So we have two methods for calculating interest on drawing, and these two methods are applicable in two different situations. Like for example, if partners are making withdrawal from the firm on the withdrawal is of equal amount and at equal interval. I will explain it. Let me first write it down. If withdrawal is of equal amount and at equal interval as well. Equal intervals as well. Then in such a situation, average period method will be applicable. Right? See, there are two methods of calculating interest on drawing. Those two methods are average period method, product method. Average period method is applicable when partners are making withdrawal on a regular basis and the amount of withdrawal is same and interval between the withdrawal is also same. Like for example, one of the partner is making withdrawal on 1st of every month. That means that he is making withdrawal on 1st January, then 1st of February, then 1st of March, then 1st of April. This is how he is making withdrawals. So that means he's making withdrawal at equal interval, right? At the difference of month difference. And he's also making the withdrawal of equal amount. Like let's suppose he's withdrawing amount in the equal installment, 50,000 every time. 50,000 on 1st January, 50,000 on the 1st February, then 50,000 in the March, then 50,000 in the April as well, and so on in the other months of the year. So if a partner is making withdrawal in the equal installment, equal amount, and at the equal interval as well, then in such a situation, average product method gets applied. In any other situation, the other method will be applicable. That means product method will be applicable. So for example, let's suppose partner have withdrawn 50,000 on 1st January. Then on the 15th of Feb, he's making a withdrawal of 40,000. Then in the month of June, on 30th of June, he's making a withdrawal of 60,000. Here in this case, you can see the amount is different as well as there is no equal interval between the withdrawals. Withdrawals have been made on different dates. Plus withdrawal, there is a unequal amount that has been withdrawn by the partner. So when there is unequal interval with unequal amount of drawing, in such a situation, product method gets applied. Otherwise, if amount and interval both are equal, in such a situation, average period method will be applicable. Tell me all of you, is this clear to everyone?
Yes, sir.
So there are, how many methods are there to calculate interest? There are two methods, average period method and the product method. When the interval of withdrawal and the amount of withdrawal is exactly same, then average period method will be applicable. Otherwise, product method will be applicable. Okay. So these are the method of calculating interest on drawings, average and the product method. When drawings have been made by partner in equal installment at equal interval of time, then average method, otherwise product method. Like for example, if withdrawal has been made like this, on 1st of January 50,000, 1st Feb 50,000, 1st March 50,000, 1st April 50,000. In such a situation, average period method will be applied. And in any other situation, like on 1st of January 50,000, on the 15th of February it was 40, and then it was 10,000 and 20,000. The amount are different as well as there is no common interval between the dates. So in this situation as well, product method will be. Okay, I hope everything is clear till this point. So until now, we have discussed that at the time of treatment of interest, there can be two perspectives. From the viewpoint of the firm, we will always consider interest on drawing as the income or the revenue for the firm. But from the partner's point of view, it is considered as the expense. Now, as far as the general entry for the interest on drawing, sorry, you need to just correct it. Journal entry for interest on loan, this is interest on drawing, it will be. So the general entry for this will be partner's capital account debit to interest on drawings, and then for transferring it will be interest on drawing to profit and loss appropriation account. And finally, then there will be two methods to calculate interest, and those two methods will be applied in two different situations. Okay, now finally, let's talk about calculation of interest on drawing by average price method. This will be average price method. So how do we calculate the interest on drawing by average price method? Let me write down the formula. First of all, we will talk about average period method. Okay. So the formula for calculating interest on drawing by average period method will be interest on drawings equals to total amount withdrawn, total amount of drawing multiply with the rate of interest, and then multiplying it with the average period divided by 12. This is the formula for calculating interest on drawing by average period method. Total amount, rate of interest, average period divided by 12. Now we will talk about the calculation of average. Now, because this might not be clear to all of you that what is, sir, what do you mean by average period? So we will talk about this. How do we calculate average period? But for the time being, let's take an example. Let's suppose total amount withdrawn by the partner is 5 lakh, and the rate of interest decided among the partner was 10%. All right, and then let's also suppose that average period is 6 divided by 12. All right, so in this example, interest, the value of interest will be 50,000, 5 lakh plus 10,000 will be 50,000 into 6 upon 12. So that means interest on drawing will be 25,000. This will be the interest on drawing. Okay, is this clear to all of you? Average period method, interest is calculated like this: total amount withdrawn into rate of interest into average period divided by 12. We will talk about how do we calculate average period. But just let me know if it is clear to all of you. Is this calculation clear to all of you? Eben,
Yes, sir.
Mariam, Saf, and everyone else. Okay.
Yes, sir.
So if it is clear, let's now talk about, sir, how do we calculate average period? How do we calculate average period? So the formula for calculating average period is pretty simple. Average period equals to months. Just try to understand. No need to write it down now. I'll give you some time for writing everything. But for the time being, just focus on the understanding. So months left after just a moment, there's a problem with my visualizer. Kindly wait for 2 minutes. Yeah, okay. All right, everyone. So we were talking about the calculation of average period. How do we find average period? So for calculating average period, the formula is month left after months left after first drawings plus month left after last drawing divided by 2. This is the formula for calculating average period. Month left after first drawing, months left after the last drawing. All right. So this is the formula. Let me explain how it works. For example, it is given in the question that partner withdrew fund at the beginning of every month. Beginning of every month. All right. It is given in the question that certain amount of fund is withdrawn every month at the beginning of every month. Then in such a situation, how do we calculate average period? Average period will be calculated like this. Average period equals to month left after first drawings plus month left after last drawings. We will divide it by 2. Right? So tell me if fund has been borrowed, sorry, fund is withdrawn at the beginning of every month. So fund must have been borrowed at the 1st of April, right? On 1st of April, the partner must have borrowed the fund. So after making withdrawal on 1st April, how many months are left on after the first drawings? How many months are left after first drawing? If amount has been withdrawn on 1st of April, then how many months are left after 1st of April? Answer is 12 months. All right, is this clear to you, everyone?
Yes, sir.
See, let me try to explain this again. For example, partner is withdrawing 50,000 every month. So he must be withdrawing 50,000 on 1st April. Then he must have withdrawn certain fund on 1st of May, then on 1st of June, then on 1st of July, and so on till 1st of March. So when first withdrawal has been made, how many months are left after the first drawing? So if first drawing had been made on 1st of April, so after 1st of April, there are 12 months still left. So month left after first drawing is 12, right? Now we will add month left after the last drawing. So last drawing must be done on 1st of March, right? After 1st of March, one more month is left. The entire month is still left, right? 1 month is still left. So 12 plus 1 divided by 2. So it will be 13 divided by 2. So average period will be 13 divided by 2. It will be 6.5. This is the average period. Tell me guys, is this clear? If fund have been borrowed, so if fund has been withdrawn on the first day of every month at the beginning of the month, that means in such a situation, average period will be calculated like this. Month left after first drawing, it will be 12. Month left after the last drawing, it will be 1. So 12 plus 1 divided by 2, they will get 6.5. Is this right? Is this correct? So everyone is everyone is clear about this?
Yes, yes, sir.
Yes.
Okay. Anybody having any doubt? Abin, Alexander, Hiba, Khushi, Mariam, Muhammad. So I hope everybody is clear. Now I'm moving to the next example. Let's suppose, and I want all of you to answer this one. Let's suppose withdrawal is being made at the case second if withdrawal is made at the end of the month, at the end of every month. Then find average period. Find average period. If withdrawal is being made at the end of every month, then what will be the average period? So in this situation, average period will be, try to understand this please. Average period will be, tell me the month left after first drawing. How many months will be left after the first drawing? Tell me. Tell me how many months will be left after the first drawing?
Sir, 11 months.
Correct, 11 months. Since the withdrawal will be made at the end of the month, so the first withdrawal must be made on the 31st of March. Okay, so excluding the March month, we will have 11 more months after the first withdrawal. So the month left after first withdrawal will be 11. Okay, now not 31st March, it will be 31st April. So first withdrawal will be made on 31st April, and after 31st April, we will still be left with 11 months. And could you please tell me the last withdrawal will be made on which date? Last withdrawal will be made on which date? Tell me. Last withdrawal will be made on which date? It will be made on 31st of March next year. So after the last withdrawal, how many months will still be left in the current year? 0. Right? And then again, we will divide it by 2. So the average period will be 11 upon 2. That means 5.5. This will be the average. Oshi, Mariam, Seth, Alexander. Is this clear or not? Calculation of
Sir,
average.
Yes, sir.
sir, it's clear, but can you show the question? I'm getting confused, sir.
Yeah, no problem. We'll discuss the question. I'm just trying to explain the average period just.
Okay.
Okay.
So can you explain this again?
Anybody want me to explain this again? Sorry. Saf
Yeah.
want me to explain it again. Okay. Saf, see, we are talking about the calculation of average period. How do we calculate average period? So in order to calculate the average period, the formula that we have is formula for this. Just let me show you the formula. Formula for calculating average period is month left after first drawing plus month left after the last drawing divided by 2. So let's suppose if we are making withdrawal at the end of every month, right? At the end of every month, that means let me write it here. See, if we are making withdrawal, we have these months, no? April, May, June, July, August, September, October, November, December, then January, and March. Okay, so let's suppose we are making withdrawal at the end of the month. So the first withdrawal has been made on the 30th of April, right? And similarly, next withdrawal must be made on 30th of May, 30th of June, 30th of July, August, September, October, November, December, January, February, March. So fund is regularly being withdrawn by the partner on the last day of the month. Okay, so last withdrawal must be made on the 31st of March. Is that clear? Tell me, is this clear till this point? Any doubt?
Clear, sir.
Clear. Now we need to find out what will be the average period in such a situation. If fund is being withdrawn at the end of the month, so average period will be month left after first drawing plus months left after last drawing divided by 12. Tell me how many months are left after first drawing. So excluding the month of April, how many months are still left? 11 months are still left, right? Is that correct? So we will be writing 11. 11 months are still left after first drawing. Then how many months are still left after the last drawing? Tell me after the last drawing has been made on 31st March. So in the same year, how many months are still left? Answer is 0. 0 months are still left. That means 11 plus 0. It will be 11 plus 0 divided by 2. So answer will be 11 divided by 2 will be 5. Let me say, is this clear now?
Yes, sir.
Okay. And similarly, if withdrawals are being made on the 1st of every month, let's suppose first withdrawal has been made on the 1st of April. And similarly, after the equal interval of 1 month, fund is regularly being withdrawn on the 1st of every month. So 1st of April, 1st of May, 1st of June, similarly, for all the months, fund is being withdrawn by the partner on the first day. So the last withdrawal must be made on the 1st of March. Okay. So in such a case, average period will be calculated like this. Average period in such a situation will be, after first drawing, how many months are still left? Entire month of April is still left. So after April, 11 more months are left. So that means after first drawing, 12 months are still left. And after the last drawing has been made on 1st of March. So the entire month of March is still left. So 1 divided by 2. 12 plus 1 divided by 2 will be 6.5. Is this clear now, all of you?
Yes, sir.
Yes.
It's clear now.
Okay. Okay. All right. So this is how we write the formula for interest on drawing in case of average. This is not average product method, guys. Please correct it when you will write it on your notebook. Average product. This is not average product. This will be average period method. So calculation of interest by average period method will be total amount withdrawn into interest rate into average period divided by 12. And how do we calculate average period? So this is the formula. Average period equals to month left after first drawing plus month left after the last drawing divided by 2. Okay. Now, when you will calculate average period, depending upon if the withdrawals are being made at the beginning, the average period will be 6.5. If withdrawals are being made at the middle of the month, it will be 6. Average period will be 6. And if withdrawals are being made at the end of the year, it will be 5.5. All right. So for the timing, just keep that in mind. Average period, when withdrawals are being made at the beginning, it will be 6.5. When withdrawals are being made in the middle of the month, it will be 6 months. And for the drawings made at the end of the month, it will be 5.5. Okay. We will talk about the alternative method of calculating average period as well. But for now, let's discuss a few questions. Then we will come back to the alternative method of finding the average period. Okay. So this is the question. Let's do 1 or 2 questions, then we will end our session. So question number 12 says that Ram and Mohan, 2 partners, drew for private use 1,20,000 rupees 80,000. Interest is chargeable at 6% per annum. Calculate interest on drawing of the partners using appropriate formula. All right. So see, in this question, Ram and Mohan have withdrew total fund of 1,20,000 80,000. Okay. And interest rate is 6% per annum. Okay. Now it is not mentioned in the question that whether the fund has been borrowed, fund has been withdrawn from the business at the beginning of the month or at the end of the month or at the middle of the month. Then in such a situation, how do we calculate interest on drawings? Let me show you how do we calculate interest on drawing? Question solution to question number 2. Calculation of interest on drawing. Calculation of interest on drawings. Calculation of interest on drawing. So amount of drawing made by Ram and Mohan are 1,20,000 and 80,000, right? So Ram and Mohan. Ram has withdrawn 1,20,000 and Mohan has withdrawn 80,000 respectively. Interest rate is already discussed between the partners, 6% per annum, 6% per annum. Okay. Now see, if you remember the formula for calculating interest on drawing was total amount of drawing, right? Rate of interest into average period divided by 12. Is that the formula, right? Formula for calculating, let me show you. Formula for calculating interest on drawing is total amount withdrawn into rate of interest into average period divided by 12. Now, see, in this case also we need to find out average period, then we will be dividing it by 12. And similarly here also average period divided by 12. Now the question is that what should be the average period? Since question does not mention that this amount is withdrawn whether at the beginning, at the middle, or at the end of the month, then just keep this in mind. If question does not specify that when drawing is being made, whether it is being made at the beginning, at the middle, or at the end, then in such a situation, average period is always taken as 6. Average period is always taken as 6. So average period will be 6 divided by 12. And in this case also 6 divided by 12. Is that clear, all of you? Whenever it is not mentioned in the question that fund is being withdrawn, whether at the beginning, at the middle, or at the end, then in such a situation, average period will always be taken as 6. Then after taking average period as 6, we will divide it by 12. Now we can calculate interest. So 1,20,000, 6% on 1,20,000 will be 7,200. Just let me calculate. 1,20,000 into 6% and divided by, so 3,600 will be the interest on drawing for Ram, and for Mohan it will be 80,000 into 6% divided by 12 into 6, so 2,400. So this is the calculation of interest on drawing in respect of Ram and Mohan. Tell me guys, is this clear, all of you? Question
Yes,
number
sir,
12
clear.
is clear. Okay. Everyone else, please tell me if it is clear or not.
Yes, sir. Clear.
Heba, is this clear? Alexander?
Yes, sir. It is clear.
Let's discuss one more question, then we will end our session. Now, question number 13. B and M are partners in a firm. They withdrew 48,000 and 36,000 respectively during the year, evenly at the middle of every month. Okay. Now, question specifically tells you about the timing of the withdrawal. So B and M are regularly withdrawing the fund at the middle of the month. Okay. And throughout the year, they have withdrawn total 48,000 and 36,000. According to partnership agreement, interest on drawing is to be charged at 10% per annum. Okay, so interest is already agreed upon. Calculate interest on drawing of the partners using appropriate method. Okay. So since the amount has been withdrawn evenly, it is mentioned in the question that amount is being withdrawn evenly throughout the year and at the middle of every month. So that means average period method will be applied. So in question, let me show you. solution to question number 30. Calculation of interest on drawings. Calculation of interest on drawings. There are two partners, B and M. B and M. Amount withdrawn by Mr. B is 48,000 and 36,000 respectively. Rate of interest is already agreed. Rate of interest is 10% per annum, right? 10% per annum for both the partners. Now we have to multiply it with the average product and divide it by average period and divide it by 12. And here also average period divided by 12. Okay. Now see, since the amount has been withdrawn at the middle of the month, every month, at the middle of the month, that means average period in such a situation will be, I've already told you that whenever fund has been withdrawn at the middle of the month, the average period for such a situation will be 6 months, right? You can see case B. If drawings were made at the middle of the month, then the average period will be taken as 6. Is that clear, all of you? Average period will be taken as 6 if the funds are withdrawn at the middle of the month.
Yes, sir.
All
Clear.
right. Okay.
It's clear, sir.
Okay. So instead of in place of AP, we can write 6 and 6 here as well. Now we can calculate the interest. 48,000 into 10%, it will be 4,800 divided by 6 or divided by 12 multiplied by 6, it will be 2,400. And similarly, in this situation also, it will be 3,600 divided by 12, so 1,800. Okay, so this is the calculation of interest on drawing in these questions. Question solution for question number 12 and 13 is on screen. Anybody want to take this screenshot can do so. Done, everyone? Anybody want to ask anything, any doubt?
Sir, we take 6 as the rate because it's
We have taken the, sorry.
Sir, we taken 6 as the rate because the average period is made at the middle of the month. That's why we take 6.
You are talking about question number 12 or question number 13?
Question number 13.
Question number 13, we have taken a rate of interest at 10% only. Since it is, the rate of interest is already given in the question. Na? Rate of interest in the question says that partner will be charged interest at the rate, this. See, in the third last line, you can see that here it is written that partner will be charged interest at 10% per annum. So we have charged interest at 10% only in this question. But average period is taken as 6 months. Average period is taken as 6 months because withdrawals have been made immediately at the middle of the month. So whenever withdrawals have been made at the middle of the month, we will take 6 as the average period. Therefore, we have taken 6 as average period for in case of B as well as in case of M. Is that what you were asking for?
Okay, sir, we have to take the 10% and also the average period.
Yeah, we have to take the 10%. 10% is the rate of interest. Then
Yes.
multiply it with the average period divided by 12.
Okay. We have to take the 10% of that amount and multiply by the average. Okay.
Correct. So basically, we are applying this formula. See, we are continuously applying this formula. The first formula you are able to see on screen, I hope. Interest on drawing equals to total amount withdrawn into interest rate into AP divided by 2. Got it? This is the formula that we are using here to calculate the interest rate. See, total amount is, in case, let's just focus on B. Just focus on B. Yeah. So B have withdrawn total amount of total drawings of B is 48,000, right? Is that correct? Then the rate of interest that will be charged from B is 10%. and we have multiplied it with the average period divided by 12. So average period that is taken is 6 because withdrawal has been made at the middle of the month. Then we divide it by 12. Is that clear, Evan? Or everyone?
Yes, sir, yes. Sir.
Just Saf is asking to show the question, but you want me to show the question 12 or solution 12?
Sir, question.
Question. Just question. Guys, I can also share these PowerPoints with you. Anybody want the PowerPoint? You let me know.
Yes, sir. I need PowerPoint.
Okay, okay. I'll share the PowerPoint. Okay, guys. So I hope everything that we discussed in today's class is clear to all of you. Today, the point of discussion was in how do we calculate interest on drawing. So in today's class, we started our discussion with the treatment of interest on drawing, where I have told you that interest on drawing is considered as a revenue from the firm's point of view, but it is an expense from the partner's point of view. As far as the general entry for interest on drawing is concerned, we need to pass two general entries at the time of when the drawings are due and when drawings get transferred to the profit and loss appropriation account. Then there are two methods of calculating interest on drawing. In today's class, we were only talking about the average period method, but in the next class, we will also talk about the product method. Okay. Then we did few questions based on the same. We also talked about the average period. So this is it for today's class. Thank you so much everyone for attending the class. We'll discuss more about the fundamental of partnership in the next class that will be on Wednesday. So till that time, take care all of you.
Okay.
We'll see you in the next session. Thank you so
Thanks.
much.
Thank you, sir.
Thank you, sir.
Sir, how will you share the PPT?
I'll share it through Amir. I'll share the PowerPoint with one of my team member, and he will share the PowerPoint with you. Okay, is that clear?
Okay, sir. Thank you.
So you can directly connect to the coordinator and ask for the ask for the PowerPoint. Whoever is
sir.
coordinating with you, you can ask for the PowerPoint of the accounts.
Okay, sir. Thank you.